What's going on, traders? How we doing? You made it to the one and only Money Mitch right here on Benzinga's. We got a great show for you guys today. We're going to get into where is the relative stocks. Did the stock market bottom? I got an interview with Brian Overby, senior analyst at Ally Financials. Stocks from the chat. We'll do it all right here on Money Mitch. So hit the like. Let's get it started.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch.
What's going on, traders? Yes, I know this market. This market is a tough one to battle. Sometimes, guess what, guys? We are going to get some green action. Yes, the market is green today, baby. We're coming back. But the question is, did we find the bottom of the market? Let's go ahead and let's get right into it. Let's take a look here and see what we see on the overall market. And I'll just let you know, guys, the numbers coming into the close here, absolutely astonishing. I will tell you that. There was a huge buy. You can tell the imbalance there. Right now, last candle coming in there with 23 million shares on the 15-minute. So showing you that, yes, some people are calling this the bottom right here. Now, the question is, am I calling this the bottom here? I mean, I think we did get to a good monthly support here where we tried to break. And so I'll go ahead and I'll draw this line off that monthly support somewhere between the 429 area. We actually went through today and then recovered. So at least longer term, I think we got a close to a 23.6% retrace on the overall move from that 2020 breakout, right? And so I've been trying to draw kind of levels down here in the 420s, 418 areas. But as you can see, it didn't really get down that far. We got down towards today of 420.76. Now let's take a look here at the Qs, see how the Qs are recovering here. Of course, the Qs are recovering a significant amount, but also what? Finding a monthly support area to close above. I think this is very important. I think we got to watch for this now to see if we get kind of the action right back on up. Of course, we could get some rallies to come back after a couple of days of down action. So I'm not fully calling it the bottom here, but I can tell you at least what I'd like to do a lot of times is look at my RSI indicator here at the bottom, right? We can see what we want to do is chart extremes on the RSI. So what's an extreme? You're looking for big downtrends in here. What has gone below this line and how many times has it gone? And at those moments, did we quickly recover the losses? And so in kind of this 2019 time, you can tell we start hitting a little bit here, and we actually start eventually pushing on up when we got below this 17 level here on the RSI. So that, at least technically wise, we are in oversold areas. Underneath that 25, you would say we're in that oversold. So I'm going to keep watching to see what happens here. But technically, I do understand why some people are calling the bottom. We did get a nice little push on up today. We'll see what happens, but let's go ahead and catch up with the chat. What's going on out there? Zoten, Easy, Mike in the chat, Stan, Mac, what's up? Mellow Trade, IBM earnings. Let me know when they come out, Mellow. SDC going, says Hex. How we doing, Beach Bum? And we also got Roy in the house. How we doing out there, guys? Stay tuned, guys. We're going to have a great day today. Let's get into some of these sectors and industries. And up next, we're going to be getting into an interview here, guys. So stay tuned, guys. I can't wait. We have an interview with Brian Overby. He's a senior option analyst at Ally Financials. Yes, guys, stay tuned. Options strategist coming on up. We'll talk all about that. Let's get into now what was strong and what was not today. All right, so before we get into today's show, one of the things that we want to talk about is, of course, the VIX. Okay, so let's go ahead. Let's pull up the VIX here. So the VIX really did get to pretty good all-time highs right now. This is actually known as the fear gauge. It hit its highest levels since November 2020, started pushing on up even surpassing the kind of up there. So we're going to keep watching to see what happens on the VIX, but definitely it was pushing on up there. It almost got towards the 30 here on the VXX. We'll see if it kind of keeps this volatility in the market. I think this is important to watch. Of course, we got the Fed meeting on Wednesday. The Fed, of course, could, talk about interest rates. The expectations are that they will not act on this January meeting, but of course, just start talking about how they're going to be raising those hikes and going into March. Another thing that was talked about over the weekend, Goldman Sachs said over the weekend that it sees risk rising that the Fed could enact more than a 4/4 percentage point hikes that the market has priced in for this year. The firm also said that the Fed might start running off nearly the $9 trillion in assets that it's holding. Of course, we've heard about the tapering, but how quickly will they go into selling these assets is definitely something to keep on the radar. All right, let's go ahead. Let's look at what was strong today and what was not. First thing we're going to take a look at, of course, we take a look at the change from the open daily. That's one of the things that I like to pay attention constantly. So let's take a look here. Consumer cyclicals up 2.62%. Not a bad day. What did good in consumer cyclicals from the open? If you could take a look here, department stores definitely leading the way here. Actually, I think really driving this whole sector. This is why it's important to take a look at the industry. Even though you're seeing the whole industry green, which of course helped it keep going, this one was up 18%, more than double the one behind it. So definitely department stores leading consumer cyclicals today. What led there? So let's take a look here. All right, so KSS having a great day there, guys. KSS up 35%. We'll see if it can continue. One of the things I do like is a sideways hold on the hourly chart. That's looking pretty decent to have a continuation. We'll look at Macy's. Macy's having a good move on up. We'll see if it can get back on through these highs around 27 and continue its move on up. Another one that had a strong day today, Dillard's. Dillard's kind of a little reversal candle here. Nice little bottoming action that I'm going to watch. This one was a strong stock for a very long time before it broke trend here kind of in early December. We're going to look to see if we can start trending back on Dillard's. This is one that I do like. Of course, this is a little bit more expensive stock, but once it gets roaring, I've seen it really kind of hold trend. And one of the things that I like about this is during this whole time, Dillard's was going sideways and not down. All right, so let's go ahead. Let's take a look at some other areas that were hot today. Technology up 2.42% from the open here. Health information services doing well there. Of course, those are kind of more, I'd call these little bounces into kind of that weakness. But let's take a look also at some other ones like software application. We saw some weakness in these names. You guys know I've been looking for these to be weak, and they actually got a little bit of a kind of a push today. The question is this kind of more of a dead cat rally here? Let's take a look at some of these names. There was some big movers. Let's take a look at Shopify. You could definitely take a look here. Not a bad day there for Shop, having a good day, pushing on up. So definitely take a look at that. Another one that had a good day today is Hubs. Let's take a look at Hubs. Hubs pulling back, but we'll see if it can get back above 500. But these have been really weak, so it's not something that I would completely just start jumping into the boat. I definitely need to see them come back a little bit more before I'm kind of getting into these names. But you can definitely take a look at another one, even Monday, that I've been calling from about the 300s, catching a little bit of a bounce today. Even one that I caught today on a short, Splunk. I actually got this one on a short today, and I was making decent money on it, and at least I was able to take a little profit on it. But as you can see, around that 12 o'clock time, it really reversed up and then got back up there above the 120s. So keep your eyes on that one. That was Splunk, and I called that one out on live trading. All right, guys, in a second, we're going to get into an interview here with Brian Overby, the senior options analyst at Ally Financials. You guys do me the favor, smash the thumbs on up. We got over 130 people watching. I want to see at least 50 likes before I bring on Brian. So do me the favor, guys, smash that thumbs on up. So another stock that I wanted to take a look at was Lucid, because I thought this was very important. I've been seeing the market really weak. We went through that lockup period. We kept holding this support. It's such a solid support line that the stock does not want to break. The question is, if we can get the stock market to really start coming back on up, I want to be watching to see if this one can get a nice push on back up there towards the 40s and up to the 50. It definitely is holding around this 36. You see some wicks down here where you get a little bit below it, 35.53. You can get 33.76. And today you even went down towards a low of 34.12, but you keep closing above that 36 level. We'll see how that kind of holds on. If it keeps holding there, I have a feeling that you might get a little bit of a rally one day. And next thing you know, you could see it pushing off of that level. So we'll keep an eye on it. Either way, I was looking even of a short underneath that line today. It didn't hold beneath that, but we'll see what happens on Lucid. All right, guys, let's go ahead. Let's get into our interview time. I hope that you guys out there smashing the like button, supporting right here on Benzinga. Let's go ahead. Let's bring on Brian Overby. If you guys don't know Brian, I'll definitely tell you guys all about that. And also in the description, you guys can find his book, The Option Playbook. Let's go ahead and bring on Brian. How we doing, Brian?
Doing well and very happy to be here. Crazy market, as you have alluded to. But on a crazy market day, it's awesome to be talking to Benzinga and talking a little bit about what has gone on in this marketplace.
Thank you for coming on. If you guys don't know, this is the Senior Options Analyst at Ally Financials, best-selling author, educator, and has more than 20 years of experience in the markets. So first thing first, let's learn a little bit more about your background and what brought you to Ally Financials.
Well, my background, I've been in the industry for quite a while. I used to work at the Chicago Board Option Exchange for quite some time. I also was the head of education for Knight Financial. So I worked directly with market makers, training their brokers down on the floor that were actually placing the trades on the Chicago Board Option Exchange. And then we started a little company called Trade King, and that company actually got bought out by Ally Financial. And here we are. A few years later, I've written a book called The Options Playbook. As you've alluded to, there's a website, optionsplaybook.com. And we focus a lot within Ally in the educational space on basic option traders and some advanced things overall. But in general, Ally is all about creating an educational platform that also supports trading in general.
Definitely, I've caught some of your articles and some of your education. So definitely, if you guys haven't seen it before, check it on out. It's actually my bank, so I get a lot of information that way too. So I'd love to have you on here. Let's go ahead. Let's talk a little bit about the market sentiment overall. I mean, we did see a nice kind of close here, but where are you kind of at the market right now?
Well, being an option trader, I always am paying attention to the VIX. And we saw the VIX spike up towards that 40% level. It's been a long time since the VIX has been able to break through that 40% level. It did not hang there long. And one of the things that was interesting is that the VIX index actually hung just above that 30% level all day long. I was kind of looking for the big spike. We're talking about 5% down day in the NASDAQ overall. Everybody was saying bear market. We're in a bear marketplace at this point in time. Anytime we have over a 10% correction in the S&P 500 index, that's usually considered a bear market. And we were there for a minute. Other things that were real interesting to me was to see the action in the IWM and the Russell 2000 index. That's the ETF that tracks it. But actually to see that index actually close up higher than the other indexes overall. And it had a big breakdown as far as the channel was concerned in the IWM just a few days back. And we saw a lot of put buying that was going on in the IWM overall, just not only in one specific expiration and strike, just open interest in puts in the IWM when we saw that breakdown in the marketplace. Now to actually see the IWM kind of lead the market back, I thought that was a real interesting thing and adds a little bit of more of a bullish spin. We saw the VIX index come crashing down below the 30% level, which I do anticipate that'll be much lower on the open tomorrow. But those were a couple of the unique things that I saw as an option trader, more so than the other things that a lot of people are talking about: Fed, interest rates, everything else that created this panic that we had today.
Yeah, I've heard a quote that I got from one of our traders that's on pre-market prep in the mornings. He said that the market likes to hurt where it can hurt the most. And I think that this is one of those cases where we see that, right? You start seeing all the bearish news, everyone talking about bear markets, everyone's leaning short. Oh, there you go. And there's a rally. One of the things that I wanted to talk to, and we can get into a little bit of option talk here. And for you guys that want to check out, I did put a link to the Options 101 Trading Basics. So if you guys are basic options traders, want to check that out, definitely check out the link in the description after the show. Now, in these volatile times, how can we use options to kind of maybe protect or even get returns in situations like these?
That's a great question. Now we do have a LI YouTube channel also, and I do a show called Stock Play of the Day. And a lot of times, a lot of the trades, especially recently, I've had the tagline of FOMO, fear of missing out. So we've talked 6 or 7 months ago about how I might participate in the financials using options, and also most recently in energy. Now, those are obvious things that a lot of people are talking about, because increased interest rates usually means that these two sectors in particular do pretty well. So if we're stock picking, what's one simple strategy that we can do where we can limit our risk and also still participate in the marketplace? And one of those are just going out a little bit longer in time and buying in the money option contracts as a substitute for the stock. So I'm just going to highlight 2 trades that I talked about recently on our educational channel. And one of them is just going a little bit deeper in the money, going out to July on MRO, a little bit more speculative stock in the energy space, doing some refinery, has done fairly well recently. But now you're a little nervous. Did I miss out? How can I still participate? If you go out and buy a little bit deeper in the money option contract, gives you more stock representation, you still get a lot of the upside if the market continues on up in this particular stock or this particular sector, but you limit the risk to about 20% of the total price of the stock. And that's if you don't even take out, if you just let it all ride. So that's what you're looking to spend. About 20% of the stock price, going deeper in the money, getting a lot of activity. If the market does go up, it acts a lot like the stock. I like to say it acts as a stock surrogate, but it still allows you to participate, because the financial sector and the energy sector both have had large runs, have done well in 2022, let alone at the end of 20 and 2021. And these are just a couple of very simple, basic trades that you can use options, not for speculation, but to participate in a marketplace that you might think has gotten a little hot recently.
Yeah, one of the times is, I'm a common stock trader. I do a lot more swing tradings, but one thing I can clearly see an advantage of in options is in times like this, because you can go and kind of do maybe a spread or some way to kind of give yourself an ability to get around some of the volatility in the market and not just get caught in one-sided markets. And it's always, I say it's great to swing trade in trending markets when we're holding trend and we're riding that bull wave. But of course, there's going to be times that are shaky, and you can see here how options can come into play. Now, one of the things that I did find is an article that you wrote on 10 option trading mistakes and strategies to avoid. I thought this was a really great article. I'll go ahead and I'll throw up the link in the chat if you guys want to check out the article itself. We'll get into a couple of these here. Let's talk a little bit about maybe purchasing out of the money call options and how that could be a strategy to maybe avoid, especially for the beginners out there.
Excellent. So yeah, Mitch. I sometimes I'll get some people that will push back on this, but I'm not talking about advanced option traders when I say don't always buy out of the money option contracts. The thing is, beginning option traders, the first thing they hear when they hear options is, oh, I'm going to learn how to speculate in the options marketplace. And why not buy the out of the money option contract? It's the cheapest. I can buy a lot of them, right? I sound great at the cocktail party. Overall, it's not a bad strategy in certain situations. You're looking for a breakout on a chart. You have a certain scenario where that might where your forecast might call for using some leverage. But in general, if that's your first trade and you're a beginning option trader, I'd rather lean to the strategies I just mentioned, where I'm buying it as a stock substitute as opposed to owning the stock outright.
Definitely, one of the things that I always look for is learning strategies that are with your skill level. Like I see traders all the time. They come in and they want to learn how to scout thousands of shares. That's going to be very difficult if you're just starting off. There's not that many people that are going to be able to have the level of tape reading to even have the ability to react that quickly. So of course, purchasing cheap call options might look fancy and great because you can get a small account in there, but a lot of the times these are going to be very close and start hitting that theta decay. I see it all the time. There's a reason why I've stayed away from options. I personally have done some studying, but have struggled in it. And a lot of that has to do with looking at, of course, the out of the money options that you get caught into. So let's go a little bit into another one here. Misunderstanding leverage. How could that be a mistake or a strategy that you want to avoid?
All right. Well, it's just understand that buying as many options as you possibly can isn't necessarily a strategy. So I'm going to go back to the MRO example, Marathon Oil, that we chatted about not that long ago on the Ally YouTube channel. And if I'm looking at MRO and we're thinking about buying 100 shares of stock, what we're going to do is actually just buy one option contract. Why? Because it represents 100 shares. And I think that is a great place to start if you're thinking about options. I don't want you to just jump all in and say, okay, I'm going to use options to try to leverage. I want to use options what they were first intended to do, which is to manage risk. And so by buying, if I'm thinking about buying 200 shares or 300 shares of stock, I'm going to buy 1, 2, or 3. Maybe get a little crazy, maybe buy 4 option contracts. But in that way, I'm going to limit the actual dollar amount that I could use. And actually, this is where options first came from. People were using options to limit risk before they found out that they can also be used to increase risk and that leverage. And to go back, Mitch, just a little bit on that out of the money option contract, one of the things about buying an out of the money option contract is your forecast needs to reach that strike. Bottom line is, if you buy an option contract, and we're talking about call options, so we'll say that, we have a stock at 50, we're looking at a 55 strike call, it's cheap. Guess why? Because the stock's got to move 10% to get to that strike by that expiration date. And if you don't think that's going to happen, then you want to lean somewhere else. You want to look at other strategies. And we do talk about the advanced strategies in the playbook also, and also on our educational channel from time to time.
Yeah, perfect. I think what you also said led into the last one I had, which was no exit plan, and definitely understanding with the leverage. With no exit plan, I mean, a lot of times what happens, you end up with a worthless contract, and that's definitely not what you want to be doing, especially if you're a beginner. So knowing that exit plan, knowing how much you're really willing to risk on that contract, so important. Let's get into a last one here, a more advanced strategy. I'll take a page out of the playbook here. Let's talk a little bit about a fig leaf. What's a fig leaf? I thought I'd get a laugh out of you.
Well, I'm glad you brought it up because we've coined a strategy, and the name is kind of taking off. Okay, so one of and this also is actually highlighted in that article, is a place to start as opposed to buying out of the money covered calls is to think about buying out of the money calls is to think about selling a call on a stock you wouldn't mind owning. That's called a covered call. All right. So in that instance, what you're doing is you own 100 shares of stock. You think the market might go up, and you say, if it gets up to this level called the strike price, you can call my stock away from me. Well, the leverage covered call, if you will, which we've termed the fig leaf, is instead of buying that stock, let's buy something that acts like the stock. So now we're back again to buying deeper in the money, longer term options as a substitute for the stock. And then why not sell a shorter term call against it? Just like if it was a covered call. So in that instance, if I sell a shorter term option contract against my longer in the money option, that's still considered covered. But you're bringing in that that premium on a percentage basis is a much bigger premium relative to the price because we've lowered the cost overall. So this is why we call it the fig leaf, is because you're kind of covered. You have something that acts like the stock, but it's not 100% the stock. And so that name is kind of taken off. So maybe we termed a strategy, but that is one of the most popular strategies to go along with covered call writing. And everything has a name. We have iron condors, we have butterflies, but this strategy never had been named. So we tried to name it in the options playbook and had some fun with it.
Hey, well, like I said, guys, if you guys want to check out the book, it's also in the description. Check it out. But one thing I definitely have to say, I love the names. I love the way you're going about it. If you guys haven't checked it out, definitely check out some of the educations Brian has to offer. Of course, you guys can also find him at Twitter at his name. It makes it easy. So right there, you guys go ahead and find him on Twitter. And where else could they find you, Brian?
Well, you can Twitter, obviously, on the Ally YouTube channel, but I tweet about all the educational events that we have. Obviously, sending out a tweet about this great event that you have going on, Mitch, and I appreciate everything.
Yeah. Last question I have is one from the chat. We'll grab one at least from them. We got here and I'm not the best person for the Greeks here, but is buying a 30-day 80 delta in the money a good start?
Yes. Okay. So that is odd that they picked 80 delta because they might have been reading the options playbook. In that, if you look at the rookies corner, we call this buying a leap substitute for the stock. Now, leap just means longer term option. Now, if I'm buying 80 delta, that means I'm deep in the money. That means that I'm going to have something that acts like the stock. Now, I might want to go out longer in time, but it does depend on the underlying stock. The more volatile the stock, the more expensive all options are going to be in general. So would I buy a 30-day on Walmart? Yeah, that's okay because it's going to be the volatility of that underlying stock isn't as crazy. If I'm going to go out and I'm going to look at a 30-day on Tesla, well, now you're talking about a volatile stock and an expensive stock. Time is very expensive at that point in time. So maybe I go a little bit shorter. If I got a little bit cheaper stock, MRO, we went out 6 months on MRO, mainly because of the forecast overall. But because that's a $20 stock, a little bit less now. But with that being said, because of that lower price stock and lower volatile stock, we were able to afford more time by going out basically to the July contract.
Yeah, I think those are all the things you got to take in when you're playing options. One of the things is I say, options, start off, you can get the basics and definitely can go really, really advanced. So I would definitely tell you guys to check out the options playbook. And thank you for joining me, Brian. It looks like that question was from Samuel Adams. So who knows? Maybe they're watching you out there. We'll see what happens. Have a good one, Brian. Sam. Thank you for joining.
All right, I think I'm going to go have a beer after that. I don't know why.
Right?
I'm a little thirsty.
I'm sure we all could take a beer with you and kind of hear options all night long.
After Samuel Adams' question, I guess.
Hey, I might have to catch you in Boston at the brewery.
Awesome. Sounds great. Thanks, Mitch.
Sounds good, Brian. All right, guys. There you guys had it. Brian Overby here. This is the a senior options analyst at Ally Financial. Of course, guys, check it on out. And I can't tell you guys enough. I'll throw you guys the link there for the top 10 options mistakes. Check out that article and let's keep on going. All right, let's get into last thing we want to do before we get on out of here is take a look at the market. How do we do right in this after hours time? Because I saw so much buying. I was wondering how we were going to push in the after hours. Looks like we started to get up a little bit here. Let's see if we can get past that 440, keep on going up, and can we get back to the 450s? 450 is the level that I'll start getting back into real bullish mode. But for right now, I do think that we're holding around the 440s. That's a good close there. And can we get back or above that 200-day moving average? 200-day moving average is 441.97. So let's see if we can get above that tomorrow. That's 442s. Let's see if we can get towards that next level. Where can I find this options playbook? Check out the description below. You'll see that Amazon link. You can go right to his book, or you can check out the website. Samuel Adams, can't blame you. Pinky's on up, man. Let's go ahead. Let's end the day. I'll see you guys next time. Like always, guys, check us out in the morning. We'll be on at pre-market prep. That's where we definitely get into some of the macro, some of the micro catalysts of the day. You guys can catch me every single day on live trading. Yes, I said it. Live trading with Benzinga. That starts at 9:05 a.m. Eastern every single day. You guys smash that thumbs on up, and we'll see you. Keep on going. Right here in the market, guys. What's up, man?